Hi, this is Mark Carrington. Brad has posed a question as to what he should do with the puts that he's purchased on IWM. I'm going to answer the question in a slightly different way using technical analysis. And what you see in front of you is a daily chart of IWM going back for most of this year. And the reason the question is important is that the price has now broken through those last lows, so it's heading to make a lower low, so I'm going to draw a horizontal line here as a chest and see how important that line is. I'm going to draw the line through the closes on those last lows. So that's around there. And we can see that well enough. And the first thing I want to do is to check how important that level is as a horizontal support and resistance level. We can see it's had some action here in the last low, and it had a little bit of action around here, this hesitation point, this consolidation point here. IWM hasn't been listed that long, and we know that it has made higher highs, its highest highs. So if I press the weekly chart, you'll see that it's in blue sky territory. So this level can't be relevant from a historical point of view because it's only the first time it has been tested. The second level of technical analysis is I look at momentum indicators to see what they might tell me. So the first I'm going to put on is an RSI, a relative strength index, and I have one here that has an 80-20 band, and we can see the RSI is basically just tracking. It's done pretty well. We got a higher high there. It was giving some warning there that we've actually got a higher high there compared to the higher high on the price. We got a higher high on the price and a lower high here. You can see this high is lower than this high. That was the warning that this was an overbought position. We've got some way to go before we get any indication that this has now been oversold. So the RSI is not that helpful. I'll look quickly at MACD and see what MACD is telling me. And a MACD, what we have here is I have my cursor tracker on the zero line. We've seen the blue signal line has now crossed the zero line, but the red line is still above. So that it's giving indication that we're heading into bearish territory, but we don't know that until the red line crosses that zero line. When I have both the red and the blue below the zero line, I'm convinced that that is bearish. And one of the ways for me to check that quite quickly is to see what the MACD looks like on a weekly chart. So I'm just going to change it to weekly, and we'll see here that the MACD is clearly above the zero line, and it's basically testing out whether it wants to turn or not. And we do have a crossover of the red line from the blue from above, which suggests that we are in a down phase on the uptrend. So basically we've got up phase, down phase, up phase, down phase, up phase. Think of these as cycles: up phase, down phase. Up phase, down. So we're on the down phase. The challenge is this one, because it's broken the last lows, is this the start of the first cycle underneath on the way down? MACD is not helping me to tell that just yet. So I'm going to remove RSI and I'm going to remove MACD because they're not very helpful to me. The next thing that I like to do is I like to put a Bollinger Band on the chart to see how it's tracking compared to the Bollinger Band. So I'll just switch on the Bollinger Band here, and what we see is that clearly we've been tracking above the center line for a very long time. Touched the top line, to reversed, and now dropped below. That's on the weekly chart. So if I change that to the daily chart, it'll become a little clearer what's actually going on. So we've been bouncing along the center line, touched, had a close outside, although the bar itself was not fully outside, a reversal and a drop below. And we have now had 1, 2, 3, 4 touches, 5 touches on the lower band of the Bollinger Band. We have got a close outside. We've got a close outside, 1, 2, 3 closes outside, but we do not yet have a bar fully outside. And I was looking for a bar fully outside to determine if this is actually time to take action as an indicator of reversal. And let's have a look and see what in the past if that has actually happened. There's one there not long ago. We have a bar here fully outside in April of this year, and that was the indication of the reversal, although that's coming out of a pretty flat period. Rolling back in time, that bar's not quite fully outside, although the open and the close are outside. That is an indication of a reversal. And we certainly have one here. The bar's pretty well fully outside. So I would be, from a Bollinger Band point of view, I'd be looking to hold in this trade until I see a price bar fully outside of the band. So that's from a Bollinger Band point of view. So let's get rid of those. And the last thing I'm going to do is to actually say, well, if I'm going to stay in the trade, is see if I can find a way of measuring when this thing is actually going to turn. And just to help myself on here is I'm going to just draw in this short-term trend line here. Because the short-term trend line is showing me where the cycles are. And I'm going to put a Fibonacci line here on the last cycle and to see where this extension actually measures up. So I'm going to go from that last low to that last high, and there's my Fibonacci line in here. And we'll see the extension line has crossed the 1, but has not yet reached a Fibonacci relevant number 12721618. Now the next thing I'll do is to say, well, has there been a situation in the past where I've seen this reversal, and so I can measure how far this might actually reverse to give me an idea of where the selling zone is going to end and the buying zone start. My guess is it's going to be somewhere in this area between the 1272 and the 2 and possibly 2272, if it's going to reverse, that is. So if we go back in time, now I'm looking for when I had a retracement that broke a prior low. And here we have one here which was in 2011. So we can see here, there the prior lows were, and we've got a retracement that's broken down below those lows. So I'm going to then measure that last phase up with the same Fibonacci tool from the top to the bottom and see where this thing turned. And we can see that this turned between 2272 and 2618. So that confirms that what I'm expecting is this to turn somewhere beyond where it is now. So from a technical point of view, I would be staying in this trade until such time as I'm getting indications from the Bollinger Band in the selling zone that we're going to get a reversal. So I'll just put this Bollinger Band back on and we'll see what I'll be looking for. So basically this band is going to go down this way, and it'll keep widening if it drops at this speed. And we'll see a whole series of bars emerging here, and once I get a close, a bar fully outside of the band, I'm going to be looking to close, or if I don't get that, if I get a retracement back to the middle line and a cross over the middle line of the Bollinger Band, I'll be looking to close at that point, which will be somewhere in this zone. I hope that helps.